Traders, happy Sunday. Hope you guys are having a fantastic weekend. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues shall always be addressed by your financial advisor. Kick off here with the SPY, fresh new all-time closing highs. I would continue to use the red line as an end-of-day trailing stop. It is the 20-day exponential moving average. That's basically a month worth of data, 5 days in a week times 4 weeks in a month. You get the idea. So as long as we stay above there, the bulls got the edge on the daily chart. You get below it on a closing basis, bulls don't have that edge anymore. Then the target would be the 50-day SMA, the institutional moving average in orange. Taking a look at the diamonds, after setting fresh new highs on Tuesday, zoom in here, they basically Wednesday, Thursday, Friday pulled back. Same thing here. They need to stay above the red line, the 20-day EMA. The Qs, they are at fresh new all-time closing highs. And just taking a peek at the banks. The banks broke out to new near-term all-time highs, fresh highs. They're not at new all-time highs yet, but with the banks holding up and the fact that they are holding above the 20-day EMA from a week ago, that's a good sign for the bulls. If the banks break below the 20-day, that's going to be a yellow flag for just the broad market, try to keep a closer eye on it. Apple has earnings this week. I get asked a lot about Apple. And, which way do I think it can go? It can go either way, and anybody can say that, right? Up or down, we'll see. But there's basically two sort of trading ranges. There's the most recent high from the beginning of May, $3 higher, right around 210. And then there's the May lows, right around 170. If we break above here, we would go back to the most recent highs at 230 from October. If we get down below here, 170, we can make an argument and say, holy mackerel, the December lows would be the target. Now, whether Apple comes out and says, they're having challenges here, there, phone sales aren't as good, whatever it is, it almost doesn't matter. It's how is the big money going to react? Now, of course, if the company comes out and says everything's poor, the stock probably will drop, right? Doesn't take a rocket scientist to figure that out. But there's a lot of times when a company will come out, raise guidance, raise a dividend, do this, do that, and yet, quote, the money still leaves the stock. So instead of trying to guess which way it's going to go, if I had shares, I would want a long put as protection. Right at the money, 45 to 90 days in time is typically what I teach. So a month and a half, 3 months is usually adequate, in my opinion. And then see what happens. If we go up, great. If we go down, great. And then we'll just look for reversals. So we'll cover Apple this week after the earnings report and see where it sits technically. But at least you have your targets in the near term. Here, 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 and here. You're never going to hear me try to give estimates on how many, phones are sold and all that stuff because all the analysts are just guessing too. Let's just wait and see what the big money does. And then I like to react accordingly. All right, moving on. Here is Amazon. It did gap down, and we talked about that in Thursday night's video. Right now, the 50-day at 1900, interesting, big fat round number, would be the downside area to watch. If we get below it, then we come down towards the 200-day. Right now, Amazon would have to regain both the 20-day in red, the 8-day EMA in blue, to turn the daily charts bullish. How about Google? Big gap up, but here's the thing with Google. This gap is so big, you're halfway in between. So the reward to risk to me right now is not that favorable. The upside target is literally 1300. The close was 1296.20 back on April 29th. All right. The downside, if it were to reverse lower, would be the gap fill. That's down near, what was the closing price? 1135. So it had a nice $110+ move, but there's no great reward to risk. Now, if I wanted to try and trade this super short term, it would need to stay above today, not today, but Friday's intraday low. That was 1228. We closed below there. A gap fill is real at that point from a technical perspective. So it needs to stay above 1228. Upside target would be those closing highs at 1296.20. How about Starbucks? Man, this thing had like a triple shot of espresso after earnings. Was at 90, now it's almost at 100. Blue sky territory, it's all-time highs. And just like Google, if I wanted to trade this one in the sense of a big gap up, anything below that intraday low on Friday, which was 95.21, that would be a stop out because otherwise it could potentially gap fill. And how about UPS? Remember we talked about this one a couple days ago after their earnings report? Big move, right? Well, On Wednesday, I said, hey, if it gets above these highs, that's pretty much going to put the September highs as the target. I didn't really think we'd get there in 2 days, but that's what's happened. You could say target achieved. If I go back and bring in a 10-year chart, let's do 5 years. That's a little, yeah, it's prettier. This is now a weekly chart. We're right here at these highs on a weekly basis. Technically, we've closed above them. That puts 127.50 as the target. This is a very big, powerful move on monster volume, even on a weekly basis. So UPS is bullish, also good for the broad market. Keep an eye on THC. This is Tenet Healthcare. We've seen good volume come in 2 of the last 3 days. Stock is still way, way, way off its highs. But if I zoom in here over the past 6, 7 months, look what's happened. Big volume moves. We've taken out this consolidation. The 200-day would be the natural next target because it is an institutional moving average. Right now around 23.40. But then this consolidation range from 28 up to 31 before the big drop began, that would be the next target. I would consider here a 20-day EMA in red as a potential end-of-day trailing stop. And last but not least, I stumbled across Vodafone. Nice big pop on Friday. It took out this previous consolidation pattern. It also got above the gap down from earnings back in May. We're above the 200-day. I mean, the next major target is up there at 21. $2.75 higher. That's actually a pretty decent move for a stock like VOD. Similar to Google, similar to StarBucks, I would not want it to get below the intraday low on Friday. However, because the 200-day is also there, I could also say, all right, if we close below the 200-day, then I want to get stopped out because otherwise it could lead to a gap fill from a technical perspective. All right, hope you found this helpful. Tried to put a nice quick short video together. Bulls have the edge on the major indexes, and we'll keep an eye on that red line. The 20-day EMA is the litmus test, the first sign we have some trouble. Have a great rest of the weekend, and I'll see you in tomorrow's video. Take good care.